Hello, everyone. I tried my best to dress as tech today as possible. So please, everybody should be engaging. Thanks. So it's just going to come up. Okay. So I'm just going to have our panelists be here, starting with Satoshi Shinada. He is partner at Verod Kepple Africa Ventures, and he's going to be here with me. Welcome. This, is it the food? Okay. So we are joining us virtually. We have Kofoworola Agbaje, who is Senior Investment Associate at Quona Capital. Please, I hope that she's supposed to be on the screen. I also have Maëlle Gavet, who is CEO at Techstars. I was about to say TechCabal. CEO at Techstars. Please give her a round of applause. Please, when you join the screen, please clap for them, because I feel like all of you are just tired. And then last but not the least, so you are prepared for this, Shruti Chandrasekhar. I hope that I did not ruin that for her. She's head of investments, Private Equity Africa, and International Financial Commission. Round of applause, please. Please, I feel like we need fillers. I know what their job is going to be is to just clap. I'm just going to wait for them to join so that I can actually start. Satoshi, how are you doing today?
Yeah. Can you hear me? Okay, yeah. Good.
Okay. All right. So I'm just going to start with you while we wait for the others. Our topic today is Africa, the new stage for global investment. And this is a very interesting conversation because working in VC, you constantly have to have these conversations and talk about these things. So I'm going to start with you since we're waiting for the rest of them. Japan is complete opposite of many African countries in terms of population growth, economic trends. So what is the investment thesis that we're using for Africa when you're investing in Africa?
Yeah, thank you for asking. I usually joke to my Nigerian friends that...
I think you might need to move closer to
Sorry?
Yeah.
Okay. Hi. Yeah, I used to joke to my Nigerian friends that they are very confident about themselves, but they are never confident about Nigeria or the market. And vice versa, when I talk to my Japanese friends, they're not confident about themselves, but they are usually confident about Japan. And I think this illustrates the gap existing between Japan and Africa. And me, as an investor, I'm very bullish about African market. So I need to encourage Nigerians to be more proud and more confident about their market, their country, while I advise my Japanese friends not to be over optimistic about the future of Japan because our market is shrinking and aging. And we as a VC fund, we have a lot of Japanese companies as our LP investor, while we invest in African markets, African entrepreneurs, so we are filling the gap. And coming back to your question, I think African startups are building infrastructure for finance, healthcare, value chain, supply chain, logistics. So this is great. Startups are building industry itself in Africa compared to other markets. And this is why we are so excited about the startups in Africa. And also, the population growth in Africa is very attractive. But I think Africa is not yet to fully exploit the potential of consumers or the number of population. And what we are seeing now is transition from B2B to B2C. And consumer spending power is not as high as other markets in Asia or Latin America in Africa. And it's not just about the consumer spending power, but it's also about the supply side. So the price should come down to become more affordable to consumers. And that's why I think we need to work on more B2B to make supply chain, logistics more efficient to bring the price down for the consumers. And also, we shouldn't forget that the consumers in Africa are usually unemployed. They are more individual business owners. So through B2B, we have to empower their business, increase their business revenue, and then they can become more consumers with more spending power. So I think we are in this transition. And from the eyes of the Japanese investors, we are betting on this market in a very long term, waiting for this transition to take place, and until when we start to see fully B2C market opportunities with huge population. And from the Japanese company's perspective, they are trying to outsource innovation from Africa to not just to push the product from Asia, but to come up with innovation that would cater to the needs of African consumers, and also how to approach these consumers with new ways of marketing and sales through innovation from startups. So I think mostly we are very bullish, but also we are very patient and long-term investors when we onboard these Japanese companies as our LPs.
That's interesting for you to say because you keep saying the word bullish. And then I know that, Keppel is Japanese. And then there was a lot of investments in Africa, and then it became one of the most successful investments in Africa, VC firms in Africa. And then found out that you actually have a collaboration now with Verod. So can you talk about that and what that collaboration, what the idea behind that collaboration was?
Sorry, I didn't get your question, sorry.
So I was saying that you should talk about the collaboration that you have with Verod now, the partnership that you currently have with Verod. Can you talk about that? Because, of course, they're African.
So, sorry, you're asking about our partnership with
your
Verod?
Partnership with Verod.
Oh,
yes.
okay, good. Yeah, so we started our investment with focus on seed stage, and that's what we have been doing in the past 3 years. And I think ecosystem has really developed from seed stage to Series A, Series B, and we used to find more gap of capital in the seed stage, but now we are seeing more gap in Series A, Series B, because we are seeing more and more new VC funds focused on seed stage, and we are seeing global investors coming into the late stage of the startup ecosystem. So Series A, Series B are becoming more like a bottleneck in the ecosystem, and we have to focus on these growth phase startups, and that is where our partnership with Verod, which is a PE fund based in Nigeria, come from. So we call ourselves having VC mindset with PE body, which means that now we have access to the resources and expertise of PE funds providing hands-on support. And this back office function and resources covers legal, finance, ESG impact, HR, legal. So we can use all this expertise from the PE fund to provide hands-on support to our portfolio companies, while we remain very nimble and quick as VC investor and very nimble to the opportunities that we see.
Thank you. I can see that Maëlle is here. Hi. Hello?
Hi there.
Oh, okay. So I'm just going to come to you since we've been catching up with Satoshi. Sorry. Okay. Basically, my question is, and this is just pretty much, what sector in Africa is underappreciated, or do you think investors are not paying attention to right now?
So I think investors are not paying enough attention to Africa as a whole. I think there is so much talent, so much innovation right now, and so many entrepreneurs who are basically working on really exciting ideas that I'm going to talk to you about specific sectors, but in general, I think Africa is only now starting to be on the map of the VC world, and I think there's so much more potential than what the VC world is currently allocating. So that's my general answer, and then more specifically, what we have seen at Techstars, because we've been operating in Africa since 2011, and we've done dozens of investment in African companies. primarily in Nigeria and Kenya, but we've also explored investment in other countries across Africa. Is lots of things happening in e-commerce, lots of things happening in the fintech space. I think I'm not going to surprise anyone here. And then in the more underappreciated, I think, environment or verticals, definitely a lot of exciting things happening in health tech, and definitely a lot of exciting things happening in agriculture tech. And so I think fintech and e-commerce somehow are on the radars of people. I don't know if health tech and agri-tech are, and I think they should be.
Right. Okay, so currently in Nigeria, there is inflation, there is money rates going up, there is investor in the markets devaluation, there's a lot of things. So what would you say in terms of strategies to put in place and how we can manage this crisis?
So yes, there's a lot of things going on. It's not for the faint of hearts right now to be in Nigeria. But again, going back to my previous comments, lots of exciting innovation going on at the same time. So the first thing I would say, and I say it every time someone talks about the current economic uncertainty that targets, that concerns, that impacts not just Nigeria, but the world in general, is that the VC world has never had more money than it has today. We're talking about $290 billion of capital that needs to be deployed. This is the highest amount of capital that the venture industry has ever had, period. So capital is there. And so if you're an entrepreneur and you're looking for capital, don't be too stressed out about it. Like, don't believe the people who say that there is no capital. There is. But, and that's my second point, be aware of the fact that we are going back to what some old-fashioned people like me may consider to be more normal, which is due diligence are not going to be wrapped up in 3 weeks. It's going to take a few months. You are going to be expected to present paths to profitability that are credible, growth plan which are credible, and really demonstrate that you have an idea that is worth founding on the basis of strong financials and target addressable market. And I know that this hasn't been really the case for the last, I'm not even going to put a date. Let's say 5 to 6 years. Some may say that it's been even longer. And so that's a change, and it's going to be a lot harder to fundraise. Having said all of that, what I say to all of our entrepreneurs, and Techstars now has 3,100 companies in portfolio. So it's a lot of entrepreneurs that we're talking to on top of all the ones who apply to our programs and do not get accepted. We talk to them a lot about building a sustainable business. Techstars is really focused not exclusively on helping you fundraise. Techstars is focused on helping you build a sustainable company, a company that is going to be around 5, 10, 15 years from now. And we tell them a lot around surround yourself with the right people, including at your board and your advisory group. Like you need more than ever people around you who have gone through a crisis, who know how to handle inflation or hyperinflation, who know how to handle uncertainty. And if around you only have people who have surfed the tech valuation bubble of the last few years, it's going to be really hard for them to give you any kind of relevant advice. The second thing that we tell our entrepreneurs is it used to be that the strong focus was on top line growth. In other words, like revenue at all costs, like spend. It's okay, you're going to gain market share, and then you will use that market share and that growth to go and fundraise again. We are not in that timing anymore where you can go and fundraise every 9 months. And so you need to trade growth without control or growth that is too costly for run rate. Like, you need to have as much run rate as you can because it's going to take much longer, referring to my previous point, it's going to take much longer for you to raise to raise in the future. And so think about the right people around you. No one ever succeeds alone. Make sure that you optimize for run rate way more than growth, even though it's not as exciting, to be perfectly honest. I'm an entrepreneur myself. I've built 3 businesses. Like, it's much more exciting to talk about doubling the size of your company than like, how can I save more money to make sure that we're still alive and we can pay salary at the end of the month? But this is a very, very clear necessity. And then the last advice that we give to founders is see every crisis as an opportunity. These are usually when you will be forced to rethink your monetization model, to rethink who are your target customers, to rethink what is the right way to deliver your services. And that can be a fantastic thing. That can also allow you to make the tough decision that you were not necessarily super comfortable to make before. And now you have, in a way, almost like the perfect excuse to make all these hard decisions that you've been postponing for a really long time, and really put your company on the right trajectory for the future. So it's going to be hard, I'm not going to lie, or it is already hard, but I do think that you have an amazing opportunity to build a business for the really long term, a business that you're going to be very proud of in the future.
It's funny because I don't think that these things you said that people don't know about it, but it's like you need to keep repeating it so that they can understand that it's an actual thing to do. I'm going to come back to you, Satoshi. And my question is still the conversation about best practices, but this time around I'm asking from an investment perspective. So what are the best practices for investment for an investor, especially when they're looking to back into the African continent? Okay, I'm saying that what are the best practices for an investor, from an investment, from an investor, especially when he knows he's going to be investing in the African continent? Is this thing echoing?
Sorry, there's a lot of echo between ourselves. Yeah, so I think maybe based on our learnings from our investment, I think there are like 2 things that I always keep in my mind. First, I think in Africa, it's very easy to mix social pain and individual pain. And as we know, Africa has lots of social issues, maybe poverty or whatever. And sometimes we see very beautiful business model trying to tackle these very important social issues. But when it comes back to monetization, it's not easy to monetize from these broad social pain points. We always need to laser focus on individual pain points where customers are ready to pay money for the solution. When the pain point is too broad, no one is actually willing to pay for that because everybody expects that this should be public service. It's not something we need to pay money for. And Africa is one of the places that is very difficult to let people pay or let companies pay. So I think understanding the deep pain points of the users and using that pain points to monetize is very important. So I think don't mix social pain and individual pain. I think that's one. And maybe my second advice is not to just, try to define your business model as something for Africa, like PayPal for Africa. I think it's very straightforward for the foreign investors when you describe your business model based on the exact global comps. But I think the market and also the problems existing in Africa is quite different from what we see in other parts of the world. So we, as a VC fund operating in Africa, we try to identify undervalued opportunities. And that business model might not be very straightforward. We cannot maybe say this is PayPal for Africa. If you look at great business models, for example, from the companies that there were speakers today, like Teamapt or maybe PiggyVest, their business models don't have exact global comps, but they are innovating unique solution towards the pain points that exist in Africa in a unique way. So while we see lots of headline news for the fundraising for the business models that have great global comps, I think we really need to focus on undervalued local solutions, which has huge fundamental strength and which has huge market to tackle. So I think these 2 points are always my kind of learning, and that is my lesson, and I think this is something that I want to share as a best practice to other people.
Thank you very much. Hi, Kofo.
Hello.
Hi. You missed out on a bit. Anyway, I'm just going to go into it with you. So I'm going to ask, does the shift in the economy change your mind on who or where you want to invest in?
On the where, not at all, because for us at Quona Capital, we're an emerging market fund and I focus on Africa. So we're still going to invest in Africa, but on who, I think the other panelists actually answered the question a bit when she mentioned on businesses trying to focus more on sustainability and the ability to focus not just on growth, but growth with purpose and ensure you have a bit of runway. So in terms of selecting kind of businesses or entrepreneurs that we do invest in, there's a bigger focus now on your ability to show either profitability or a path to profitability. And more importantly, as we also think about the economy of Nigeria specifically, or even if you think more globally, you also need to ensure that the business has a sustainable growth.
Okay. I'm going to ask you a very interesting question that keeps coming up with early stage founders, which is, what should investors look for when they're trying to invest in early stage founders? Because I feel like sometimes it's lofty.
There is a lot, and I know different investment firms probably have different criteria, but specifically, what founders should be more focused on when they're raising money and how best to kind of portray or put themselves forward. One is, I would say, especially if you're early stage, is on the experience of the founding team. So a lot of people would, for example, mention the previous companies, specifically tech-focused companies that they've either worked for or that they've founded. That's something investors look for a lot. A lot of people like 2 times, 3 times founders, just because they have the experience of one, building a startup, but also putting together the required team to be able to build. I would say specifically now what we are also looking for, so kind of bigger than or something that's a bit more focused for us is experience in the sector. So it might not actually be a startup. We're now starting to see people that used to work in traditional institutions, but in that sector, starting companies in that sector because they've been able to either determine a problem or see someone solving something and they believe they can do it better. So kind of broader than you having experience in tech, specifically having expertise in that sector is something investors also look for. And it can either be you as a founder or founding team, or you being able to bring together a management team. So this could be your CFO, CTO, Chief Commercial Officer, etc., that has that experience in that sector to ensure that you can, as much as possible, deal with regulation, which is top of mind for a lot of startups or founders, specifically in Nigeria. And another thing to focus on as a founder, especially very early stage, but because your business is going to move a lot and you're going to change, you're going to need to adapt as you build out your viable product, is just the ability to be very scrappy. One thing investors want to know when you're looking at investing in a early stage company is the ability for the founder to basically listen to the market and respond quickly enough to adapt your product, either because there's a change in regulation or because there's a new competitor or something similar.
I also don't think investors want to hear that you won't collect money from them and you're still keeping your 9 to 5.
Definitely not.
Okay, can I have Shruti? Is she on the call? I don't think she's on the call. But I'm going to ask you the question. Oh, she's not here. Okay. So I'm just going to go and say, you know what? I'm going to ask this question. What has been your biggest pain points in investing in Africa?
Is that a question for me?
No, I was asking, I don't know if she's on the call. Hello? Okay. Anyway, so moving on, I'm just going to say, I'm going to ask the question. When it comes to diversity in your businesses and your firms, what are the processes that you put in place to ensure it stays that way? It's very, very important.
Should I answer that question?
Yeah.
Okay. So one thing we do, we kind of do it on two levels at Quona. So one is the internal team, but also as we invest in companies specifically. So as I mentioned, we're a firm focused on emerging markets, and from a diversity perspective, one, I think the easy, well, not the easiest one, but one that's top of mind for a lot of people is just diversity in terms of gender. And we do that across the investment team. So just even looking beyond operations is ensuring the investment team is quite diverse. And one thing we also do very well is ensuring that the people, the investment team are part of, are either based in country or kind of part of the communities, because that also helps with ensuring that you're bringing the right voice to the table. And for our investment team, or the founding teams that we invest in, one thing we look at, one is the composition of the founding team, so both in terms of gender, we also do this in terms of disability. And because we are a global fund, diversity and inclusion has different definitions depending on the country that you're investing in. So looking specifically, if I were to talk about Nigeria, we look at, is it a local founder or a foreign founder? We look at gender diversity. And we do this on different levels. We do it for the founding team. We do it for the management team. We also do it for the full-size team. So we get our companies to report to us on a yearly basis, the amount of female employees they have, the amount of male employees we have. And more importantly, we also do it on the board level to also ensure, kind of like was mentioned earlier on, that they are having a lot of diverse voices and opinions at the table when they're making strategic decisions.
Okay, I'm going to ask the same question to you. Satoshi, I'm going to ask the same question to you. All right. So do I repeat the question? Okay. So I said, when it comes to diversity in your company or your firm, how do you ensure that there is diversity? And what are the processes that you put in place to make it stay that way?
Sorry,
Diversity in your firm? Diversity in your firm? What are the processes you put to make it stay that way?
Yeah, so we try to really diversify our team, and now we have Kenyans, Nigerians, Chinese, and Japanese. So I think this diversity is the source of ideas and different perspectives, and also to expose ourselves to different opportunities because we each have different strengths. But I think the important thing is that whenever we discuss, we get to the same page and the discussion will be very fruitful. And I think it becomes our own motivation to work in this team when you are learning so much from your teammates. And I think diversity is not just about having different people in the room. It's more about, I think, internalizing diversity into yourself so that you can start to embrace different thoughts in yourself, and it becomes the source of your new ideas and motivation. So I think we need to have this kind of spontaneous and voluntary cycle of diversity becoming internalized and becoming motivation yourself, and that keeps motivating each other in your team. So we don't really try to design or impose specific way to retain diversity. It's more about internalizing diversity, listening to others, and keep ourselves more excited about having this diversity. So I think this is kind of universal fact, not just for the VC team having diversity, but maybe also it applies to also the startups team.
All right, thank you very much. By the way, if you have any questions, please can you actually type it and send it so that we can ask the questions? If you have them, please do so that we can, before we round up. So I'm just going to come back to you, Kofo, because this was a question I had for you before you joined. And it was pretty much asking, so which sector in Africa do you actually think is underappreciated, or do you think investors are not paying attention to right now?
Yeah, I'm quite biased because I focus on fintech, and I know fintech gets a lot of the headlines in Nigeria, Africa, or globally. So I think it's an interesting question to ask a fintech-focused investor. But I think for Nigeria specifically, not to reiterate what was already said, but I don't think we get enough funding across all sectors. That's still true. But if I were to pick a particular sector that needs a lot more, not just VC capital, but a lot more innovation, it would be health. So specifically, be that all variations of health tech, insurance specifically. If you were to look at the amount of insured people in Nigeria compared to any other country in Africa or even more globally, we're still around the bottom of the line. So health tech in general, just because of the lack of infrastructure, we definitely need more VC capital and a lot more innovation coming from health tech. And another sector that, even though gets a lot of VC capital, I think there's still a lot that needs to be done in logistics in general. It's still way too difficult to move people, goods, money across Africa. It is still too difficult. So we need a lot more VC capital and a lot more innovation in those two sectors.
Would you say we have too many fintech companies, not as much insurtech, not as much agrotech, just too many fintech in Africa?
No, but I think people say that, but the honest truth is a lot of the companies are focused on other sectors, but just because of everyone needs to get paid, so there would be some form of financial services integrated into it. There are a lot of agri-tech startups that I can mention, Crop to Cash, Tribe Agri, those are agri-tech startups. But because of the service they provide and the final end consumer, there's an increasing need to embed financial services. And we're going to see that across different sectors. So I know fintech gets a lot of the spotlights, but there is a lot of work being done across all sectors. And it just looks like fintech is the princess of the day because everyone needs to embed some form of financial services. For the average human being, not even Nigerian, what's most important to you is to get paid, which is financial services.
Interesting. Do we have any questions that we want to put up? Any questions? Anyone? Any questions? No? Okay. So I'm just going to ask before we go, is there any last words that you want to share with people so that they're aware when it comes to fintech and investment in Africa, and Africa being currently very, as my MD will say, very sexy?
Yeah, one thing to just add, because I know one of the questions you asked the panelist was on what founders should do now with the level of inflation. And Nigeria has always been a high inflation environment. I think we've been double digit for a very long time. So the founders in the country have kind of been battling with this they know how to build businesses that as much as possible can survive a lot of macroeconomic headwinds. But one thing I wanted to add more specifically to founders is that good businesses will still be, as much as possible, will still get capital. There is still a lot of VC capital available and VCs need to deploy. That's the mandate they have. So the onus is on you to be able to show why your business is viable in this economic sector. And again, as I've said it, Nigerian entrepreneurs have a way of constantly fighting through the macroeconomic headwinds. So it's not new to you. The barrier might be slightly higher, but it's something you've always done.
All right. Do you want to add anything? Any last words for people in Africa looking to invest in Africa?
Yeah, I think maybe I come back to my initial comments about Africans should be more confident about the market potential of Africa. And whenever we talk about funding gap, it doesn't mean that money is not there. Money is there standing by to invest in greatest opportunities. And I think Africa now has the most interesting, vibrant ecosystem. Whenever there are brilliant talents with some ambitious mindset or rebel mindset, every time innovation is taking place from where these people are coming together. And I think in Africa, we are seeing the most active and vibrant ecosystem, even compared to other places in the world. So, yeah, that's my final comments.
Maëlle? I think she's frozen again. Okay, I think she's frozen. Yeah, she's frozen. All right. I think that's it. We've come to the end of this panel. Thank you so much, everyone, for being a part of this. Thank you for all the, thank you at least for all the nice words. I think everybody has left. But yeah, I hope that we can actually take some of these nuggets and implement it in our businesses, in our day-to-day life. Thank you so much, everyone.